Hey guys, Mike here. So we got a big week ahead and we got a boatload of economic data every single day and a lot of Fed speakers, including Powell himself, every single day. So this week will be interesting. Obviously, we're starting the fourth quarter and we're kind of starting it maybe with a bang because what happened this weekend? Our government does what they do best. They kick the can down the road. And so that means the show goes on. Whether or not that means it's going to be a sell the news event or actually just start kicking the fourth quarter off in a bullish manner, we'll have to figure that one out. But something did happen very interesting right in the last week of the third quarter, which we hadn't seen in a long time, many weeks, which also leads us to October 6th. What's so important about October 6th? What we need to watch out for on that day, what it means. We're going to get into that as well. But I will start off with what happened at the end of the third quarter last week. We saw the first weekly outflow on U.S. fixed income flows. And it has been, I believe when I counted this, upwards of 38 weeks since we've seen an outflow like this. So what does that mean? It can mean a bunch of things. Obviously, fixed income. We're talking about CDs, money markets, treasuries, bonds. So the real question you got to ask yourself is money moving out of money markets and savings accounts, things of that nature, maybe getting set up for the fourth quarter, or are people panicking out of bonds finally, tired of sitting in them, and so they're moving out of that. The bigger question, though, is where's the money supposed to be going? And you would think when you look at this chart right here, because what's happening, seasonality has played out very well so far, especially in a pre-election year here. And you can just follow the S&P, you can follow the seasonality. And so far, it's played out almost perfectly, right? And so what's the fourth quarter? It's usually up, especially on pre-election years. So is this money coming out of the money markets, the savings accounts, and the bonds, getting ready to head into the market, right? As people getting prepared. That's what we talked about when we, went over a few videos last week. It's all about the fourth quarter. And even though October is an iffy month, it can be, down, up, flat, whatever. November, December are usually super bullish because of all the holidays and stuff. And so, people will be buying. I mean, that's just the way it's going to be, and setting itself up and getting prepared for the end of the fourth quarter here to try to catch this rally, try to catch the Santa Claus rally in December. And of course, more importantly, what's going on with the flows? Our friend Jim Cameron always bringing his interviews. He's the one going to talk about this. What is important about October 6th? And guys, before we continue, please hit that like button. It helps people find the video. I really appreciate that. And if you like this kind of content, think about hitting that subscribe button down at the bottom.
Yes, October 6th is a Friday into Monday before the beginning of the strongest week of the options expiration cycle. Strongest week and a half. There's a lot of positive flows, left in the market, particularly so. Going into there because of this event vol that exists in front of it as well. So it could be front run here, because again, the event vol falls September 29th, October 2nd. So, and we're already seeing some support underneath the market. But that is when you'd expect there to start to be more structurally positive flows. Does that mean the market's going up in that window? Not necessarily.
Are we talking positive flows into equities, into treasuries?
Equities. We're talking about equities specifically here. Yeah. And does that mean markets are going up in that window? Not necessarily. What it means is there's going to be more positive flows in the context of an overhang of structural negative flows coming from the Treasury. You could just get a vol dampening effect and a slight kind of mean reversion. And it's still a bit early to start kind of betting on the no dece kind of positivity that's out there a month later. But I will say we're moving, there's two positive things. There's a short-term positive set of flows coming in the context of an oversold market already. And then you have behind it, like I said, very positive structural, even more positive structural seasonal flows coming in November and December. So, with this sell-off and us being kind of 2 standard deviations or close to it below the 20-day, very oversold, RSI is kind of in a spot. I think most entities are not out there kind of trying to bet against this thing here now. You might be looking for an opportunity to short it higher. But yes, coming into this window and October 6th after that is a period where it'd be, time is not a bear's friend, is what I like to say, in this window.
And so it's really going to be the key, right? Do we see a front run this week, maybe a catalyst coming off the government kicking the can down the road, even though government shutdowns really don't affect the market, honestly. And so, but again, they like to use news to say that's what it was, we're moving, right? And so we'll see if they front run it or not. But again, it just seems to be this setup going on. Let me know what you think in the comments about that for the fourth quarter and everything. And I realize all the headwinds. We've talked about the headwinds many times, right? And so, but again, the other thing to look at is when are people finally, you saw in Saturday's video, been holding on to these bonds, holding on to these triple leverage ETFs and everything, and saying, do I just need to abandon that and just go back into the stock market? Like that's, you know, it could be something that you see happening underneath the surface, right? And of course, we won't know until it plays out. But again, you know, when we're looking at the markets, key levels to watch here, right? And we take a aerial view here. This is the S&P 500 right there. I would say anywhere between like 4175, 4200, like that. That's just a key level to watch. And if it breaks that, I mean, that's going to be super bearish because you're breaking, you know, key levels right there. And when we add in our moving averages, you can see why, because that right there will put us below the 200 moving average. And so nothing good happens below the 200. So keep that in mind. That will probably trigger a lot of different stop losses, algos to kick in, things like that. And you all of a sudden you flip from bullish to bearish for a lot of folks. So just keep that on your charts. Now, when you look at the Qs, still following this falling wedge pattern right here, try to fill the gap, couldn't quite do it. And when we look at this, you know, the big question is, are we going to sit there and continue to move up, fill that gap, or is the market going to suck down into that weekly fair value gap below, or the daily fair value gap that's right above that opening gap right there that's still sitting there? And so that's what we got to figure out. If you don't know what fair value gaps are, and especially if you're a member, go over there and look at this video right here. You can see it's dated. It's in your Patreon too. August 11th says learn how the market really moves and use this indicator to help. So go look that up. It's very important. The market just, because remember, it's always looking for liquidity. It's always looking for the ways to fill these billions of dollars in orders and things of that nature. So just go check that out. It's very important. Now, Tesla, obviously, it's got a little momentum, trying to pick up last week right there. It's trying to pick up a little bit. And Monday is going to be key pre-market because it's going to talk about deliveries, right? This will be a key number. A lot of people are expecting to come in under. So you can bet money if they come in over, this thing is going to be rocking it up. Calls are going to be flying through. If they come in under, I mean, watch out down below, possibly. So just, you know, let's take a look at that Monday and we'll see what happens. You can see trying to reclaim the 50, got rejected. It is over its 100 right now. And on a shorter term time frame, you can see it's in this rising wedge right here. And so I'd say probably around like 257 is going to be key right here to pay attention to. If it can break above that, obviously we're going to continue up for sure. Maybe even fill that gap right there. If it gets rejected right there, just watch for a rejection though. We're heading back down for sure. Now, again, a lot of this will depend on deliveries. That's why I'm not going to go super detail into the Tesla chart. Now, Google, as you can see, we talked about this Friday, I believe it was. Rejected right there off that trend line, which was the rising wedge, fell back through, got rejected. And then, of course, it looks like it's, I mean, it's trying to get maybe some momentum shift back up when you look at this. But again, when you pull back out on a weekly and take an aerial view of this right here, you can see a bearish MACD cross forming right there. Now, this is important to understand. When that happens, and we'll scroll back and look at it, you can see kind of the RSI right there is flat, almost like a double top in a way, while this was just setting new highs. So momentum is definitely stalled right here, but it does have those gaps down below it can fill. But when we scroll back, just because something has a bearish MACD cross, when you see this right here, look at this bearish MACD cross right here. What happened? The stock still went up. All right, it just means momentum is starting to slow. And then, of course, it did a huge crash. But that was going into 2022, so just keep that in mind as well. Very important to take an aerial view of these stocks. But for the short term, again, it's one of those things where with these big stocks, mega caps that are carrying the market, if the market just starts to take off next week and they're front running, where do you think these stocks are going to go? They're going to be going up because it's the only way the market will move in a huge way is to have these particular stocks moving up. Now, AMD, like we talked about, that trend line got rejected. It is above the yearly anchored VWAP right there, which is a good thing. But when you look at this one, you know, is this going to be the fourth time we get this falling wedge breakout? That's going to be the key. I mean, you see how long this one is compared to the other ones, but those are huge breakouts. So again, it's sitting there. It looks like it wants to try to explode. 110 will be absolutely a huge resistance area. But this is one of those things just setting up. And again, this is another stock. The market is not going to really move huge without this one, and a lot of it depends on NVIDIA. If NVIDIA is breaking out, AMD will too. So just watch that right there, because this could easily, once we start getting moving in the fourth quarter, if that's what's going to play out with this seasonality, this could absolutely go between 120, 130 in there. So just keep the long-term perspective in mind. If it breaks down, obviously 89.90. Now, BABA, of course, is just basing itself off what China's coming out with. They're throwing everything at the wall. Still following this falling wedge pattern right here. You can see the MACD is trying to do a bullish cross right there on the daily. RSI is trying to turn up and get over that 50 line and everything. But, it's just one of those things. This is, look at that gap up and then all the way back down. Like, it gaps up and then just loses all momentum because something else happens with some kind of data. And I know some data came out today about the services PMI, I believe it was, coming out of China, and it was not good, right? Because their economic data is horrible, if you even believe it. Now, as far as earnings, there is nothing going to shift markets this week at all. Probably people who pay attention to TSLA obviously know what's going on in the government when it comes to MJ as far as getting legalized and stuff. Maybe legalized, anything I can look at and see what's going on with the consumer, because it still is a popular brand. I definitely want to hear about it for sure. Now, the economic data, a whole different story. Come Monday, you're going to have S&P Global Manufacturing, which they expect to go up. Construction spending, which I would expect to go up because of the bill they passed. ISM manufacturing, so a whole bunch of manufacturing data. Powell is actually going to speak Monday at 11, so I don't know what he's going to say. And then look at all those Fed presidents after lunch, right? So that's going to be happening. Then Tuesday, you're going to have JOLTS job openings, where they expect to actually, looks like, increase. JOLTS jobs quits. Then Wednesday, we're going to come in with a bunch of mortgage data. I'm going to take a guess and say the real estate market's still a mess. Then you'll have ADP employment change. Remember, the JOLTS and ADP seem to always contradict one another. Again, S&P Global Composite PMI. It's going to be another big one. Factory orders, a bunch of ISM services data is going to be coming out. This is what's been holding up the market, actually the economy, I guess you could say, because we're 70% services. And then you're going to have another Fed president, bunch of oil data come out, another Fed president. And then Thursday, you're going to have the continuous jobless claims, initial jobless claims. Again, more Fed presidents coming out and speaking, as you can see right there. And then Friday, here comes a boatload of data. Average hourly earnings, month-over-month, year-over-year, government payrolls, manufacturing payrolls, non-farm payrolls, participation rate, and then the unemployment rate, which they expect to actually decrease from 3.8 to 3.7. Please put in the comments what you think on that. And then again, more Fed presidents coming out. So as you can see, what I was saying in the beginning of the video, it's just a landmine of economic data coming out here, right? And so I'm really looking to see if the services data is really starting to crack, because that's what our economy is made up of now, right? So we shipped all our manufacturing overseas, but still, and the market don't seem to care about it. And if you look at the manufacturing data, it was like we're in a recession. Look at the services data, we're still going, right? We're still spending, and of course, and then we get a boatload of information on us and everything. And can you imagine if the unemployment rate drops again? Like, that would be just stunning. But at this point in time, I guess it would not surprise me a bit. Again, no earnings, don't have to worry about that. It's funny how the market's setting up, right? We bounced off that trend line, was it Wednesday, I believe it was, try to save that, didn't go to the 200, and all of a sudden the government's, kicking the can down the road, so there is not going to be a government shutdown, not that that should have mattered with the market anyway. And so, do we continue to go up? That's going to be the big question. And I think I agree with, Jim Cameron. It's going to be an interesting week. More importantly, are they actually going to front run it or not? But more importantly, that money that's coming out of money market, savings accounts, CDs, bonds, or whatever they're selling there, right? Have that negative outflow. Like, where's that money going? Is that going to start shifting in the markets? Starts watching the volume on the stocks you enjoy in these indexes, and let's see if big money's starting to set it up for the fourth quarter and everything. So anyway, hope you guys got some out of it. Let me know what you think down at the bottom, of course. Always enjoy it. Appreciate all your comments from yesterday's video and stuff. A lot of you guys seem to enjoy that and watching it, and I see your input. I guess we will keep the same kind of charts I have, because the vast majority said just keep those charts instead of going to dark mode. So that is what we do. Again, here to serve you guys. It's your channel too, so like your input and stuff. So anyway, I'll see you guys tomorrow. I hope you enjoy the rest of your Sunday, and I will see you later.